Welcome to today's live stream. I hope you are well. My name is Grace Moroki, founder of Uplift Management Limited, a consultancy company that deals with finances, businesses, and careers in such matters. So today I want us to discuss a very simple topic. I want us to understand what is VAT or value added tax. I want us to understand what is withholding tax, and I want us to understand the terminologies used when dealing with VAT, that is the input tax, the output tax, and such things. I've discovered and found out that uh, so many business people or even the general public do not understand these terminologies, and sometimes you get to fear something just because of the way it is presented to you, not because it is complicated, but because the way it is presented to you, it looks very complicated, and you fear even dealing with it. That is also part of the reason why so many people have not gotten to indulge in the business world, because they fear that the taxman shall be coming after them. The moment they just hear VAT, they get shivers and they think about how they will be, the taxman shall be running at them, and it doesn't have to be that serious. Right, that means you can not one, or you can how these things work so that caught up in the same that comes with it. So I want the names I want to explain briefly. I hope it shall be helpful, help us understand how these things work for to progress on well. So I'll start with the value added tax, and VAT is it's just a certain percentage, which is 16 actually percent, added to the invoice amount that you charge your clients. That is why it is called value added, because you get to charge your clients the amount of money you want to charge them, inclusive of your costs, inclusive of your profits, and then you add 16% charge to your whole amount. 16%, which means the invoice amount, if you wanted the whole cost you wanted to charge your client was 100,000, it means now you will charge them 100,000 plus 16%, which is actually 16,000, which means your invoice shall be having a total of 116,000. So your 100,000 that you wanted to charge your client is intact and has nothing to do with the VAT or the value added tax amount of 16% that you have charged your client. That is actually the money owed, that you'll have to pay back to the taxman, because that was not included in your costing. That is also part of what so many people confuse, and I don't know whether I'm able to type that. Let me just see. So the invoice amount will be your cost and expenses, uh, plus your profit margin, which we will assume it will be a total of maybe 100,000, and then the value added tax, which we are calling in this case the VAT, which is actually 16%. It is 16% of this amount, which in this case shall be 16,000. Then the total invoice amount shall be, let me just move this one. Sorry. The total invoice amount shall be 116. So the amount that you wanted to charge your client, which was 100,000, will be captured in full, which was covering all your cost and your profits. Then the VAT value shall be a separate amount that you will just have to transfer to your client, and it doesn't have to interfere with what you are doing from your own business or as a business. So what happens later? Now, this out of this 116,000, this is what is your invoice amount, right? Out of it, we will discuss this because this is your sales invoice. Let me just write that. Sales invoice. Because this is your sales invoice, this will become your sales output tax. Yeah? That means output tax is that which you charge with the invoice that is going outside, outside to your client, not remaining in the in your business. Outside, output tax. That is what we call output tax. Then out of it, we will also discuss the input tax. Now, input tax includes all the purchases that you did with relation to your business, and out of which you were charged the value added tax by your suppliers or those people who are offering you services. So how do you know that they got to charge you for VAT? Number one, the main evidence that someone charged you for VAT is because they gave you an ETR. Yeah, an ETR is usually a receipt related to VAT. So that is what when it's produced to you, you should know that out of the amount you have paid to someone, it included the VAT charges, and you should note it because it is very relevant to your business. So how much do you get to pay for your VAT? We'll go back up here. We'll say output tax, which is the sales tax, which is 16,000 according to this scenario. We are going to deduct all the purchases that um, the input tax from the purchases that we paid tax for or value added tax for, minus the withholding tax. What is withholding tax? So withholding tax, if you get to supply goods or to offer services to a client who is a registered tax agent, they are demanded or they are expected by the Kenya Revenue Authority to withhold an amount of 2% out of the invoice that you give them and remit it on your behalf directly to the Kenya Revenue Authority. So does that become a ransom to you? Not in actual sense, because you are expected to claim the same amount when you are remitting your VAT to the Kenya Revenue Authority. And in actual sense, even if you don't remember to claim it, as long as they have remitted and paid, the system itself will tell you that someone somewhere paid an amount of withholding tax amounting to this amount, and you need to claim it when filing for your VAT. So what will be the actual amount of VAT that you get to pay by the end of the day? Let's see. Let's go back to our worksheet. So the actual, let's do it from here. The actual VAT amount you pay will become the output tax. That is the tax that you were charged out of you charged your clients out of the out of the sales that you did, which in this instance it was 16,000. You less, you come here and less purchases tax or the input tax. Let's assume the input tax was 10,000, because also the purchases are, well, by the moment you do a sales or a sale of 100,000, it means also that you have had to buy goods worth maybe a certain amount, unless you are rendering services. But that does not also hinder you from claiming, because even if you are rendering services, you have other office related matters that you do which are chargeable for VAT, and that you are allowed to deduct the same amount. So 10,000, and then you are also allowed to less now the withholding tax. Withholding. Let's assume the withholding tax. Actually, we will not assume, because withholding tax is 2% of this amount. So we will only say 2% let's do this, 2% of 116,000. That will be our withholding tax. Maybe I should have just left it there, but for the sake of those who do not understand the Excel calculations, so let me first confirm the answer. Okay. So this will be 2320. I just pick my calculator and confirm that. Yeah, 2320. So the withholding tax here will be 2320, and that means the VAT balance that you get to pay to the revenues. Let me just correct payable. Will be this will be the output tax, and then you less the input tax, and you also less sorry. Yeah, you less the input tax, and you also less um, the withholding tax. Let me just check this one. So you, this is the figure that you get to pay to Kenya Revenue Authority. So if you are charged, you charge an amount of 16,000, don't go start fearing a lot. Just make sure you have your documents, you have your things in order, your records in order, so that you can also get to claim what is due to you, and also you get to save something for your own business. So I hope this helps someone. I hope this makes it very simple and understandable for someone out there who is stranded or is feeling like the terms and the terminologies are very complicated for them. It's very easy when you understand them, but that does not mean the whole process of filing for taxes, especially in Kenya, it's done in the Kenya Revenue Authority systems through something we call, the system is called iTax. So if you don't understand how to deal with iTax, it's good to to seek help from a consultant or an expert like myself. But if you understand the whole thing, it's still okay. But as much as you're seeking the consultation, or you are giving someone that job to just file the returns for you, it's also good for you as a business person to understand what happens aloud, so that you also don't get cheated aloud the whole thing. So thank you very much. See you another time. See you in another webinar. It's good when we enlighten each other, and bring to simplicity all these things, because it doesn't have to be that complicated. We can make it work together. Thank you very much. God bless you.